Hey guys, Whitney here, and welcome to How to Invest in Passive Real Estate. This is the video series where we teach you how to build passive income and long-term wealth through real estate investments. I'm your host, Whitney Elkins-Hutten, the Director of Education here at passiveinvesting.com. So maybe you're here because you've tried to invest passively before, but just couldn't quite get comfortable making the investment, where you've actually invested passively in a deal before but realized, oops, you made a mistake. Or maybe you're just so overwhelmed by all the information out there that you just haven't gotten started. If that is you, you are in the right place, because we are going to learn the biggest myths that investors have about investing passively that keep them sidelined. We're going to learn the different terms, pros, cons, even the math of passive investing, so you can avoid costly mistakes. And we're just going to learn how to put all this knowledge to use so you can invest confidently in your first or next deal. So let's go ahead and bust through a couple of myths right now. The first myth of passive investing that investors tell themselves is that they have no control over the asset. And we're going to get into this in a future video. You actually have quite a bit of control on the investment decisions before you get into the asset that are going to help risk mitigate everything for you. Okay, you can't eliminate all risk. Okay, but there is an extensive amount of decision making that, and I'll walk you through my whole decision tree that you are going to have that's going to help put a lot of things in your control, far more control than you ever would in the stock market. But myth number two is that investors tell themselves, I won't make that high of a return. And we've already busted this myth a few times. Passive investing allows you the largest return on your time. We've talked about the massive leverage that you can create with passive investing. Okay, and we're going to continue to pick away at that here today. But in case you don't know me, I'm Whitney. This is me and my crazy crew. This is the whole reason why I invest passively in real estate. It's just for the experiences that we can create together as a family. As I'm recording this video right now, we are in sunny Sedona, Arizona, working and playing, going to school. My daughter's going to school here, online, but we are just having a ball. And this is the whole reason why I do it. But it wasn't always like this. I started off investing in 2002 completely by accident, living, flipping, and house hacking, and did a really great job of building up equity for myself, but we weren't able to unlock those golden handcuffs and create true passive income. Now, fast forward a few years later, we were able to start getting into single family rentals, a little bit of small multifamily assets. And, we started kind of chip away at building out what I call leveraged income, but it was not passive. We really hit an inflection point when I wanted to stay home with our daughter. And my husband, who hadn't been really wanting that or hadn't voiced it, he said he wanted that too. And that's when I'm like, oh boy, we have got to change our investment strategy, because managing 80 single family units, it's just not going to be my thing. So that's really when we started diving into learning how multifamily works, how self-storage works, and how passive investing works. And here we are today. We have invested in deals that in partnership have totaled up over 6,300 multifamily units and over 1,400 self-storage units. But it's not the numbers. These are all vanity metrics. Let's focus on the results. What does all this passive investing get us? And that is 100% choice and freedom of our time. And this is just an iceberg, right? When I talk to investors, they're just like, oh, wow, like, how do I get there? And they want to go from where they are right now to the result immediately. Life is like an iceberg. We've got to build a nice, healthy foundation, okay? And grow on top of that. Okay, so when you see some of these results, I guarantee you there was a lot of work underneath that's hidden below. And we're going to pick apart all those things that might keep you sidelined so we can actually get you to your result faster. But one of the cool things here at passiveinvesting.com, we help investors do that every single day. We bring you along on our investment ride with us. We've invested over $742 million of real estate, over 4,200 doors, and you can join our investors. We have over 1,400 happy investors and counting. So in this educational series, we are going to pick apart several different things regarding financials, legal, tax, However, this is for educational purposes only. Whatever we go over here, make sure you consult with your financial, legal, and tax team before making any investment decisions. All right, guys, so let's dive in. Today, I'm going to walk you through the logical steps. Okay, how do we go from where you are today to actually getting into your first or next deal? And there's 7 steps to actually getting into a passive investing deal. Now, we're going to cover this at a 30,000-foot view level, but we can dive deeper, in each of these in subsequent videos. All right, so the 7-step formula, it's not rocket science, okay? It's literally what I'm going to hand over to you is a checklist. But these are clear steps for you to follow that will lead you to success if you execute on them. Now, where investors get themselves in trouble is when they skip any part of these steps or rush through it. Okay, so really, the bulk of your success is going to be front loading the work, and I'm going to show you what that means. All right, step number 1. You need to know your goals. What are your investment goals? Okay. First of all, if we're passive investing, okay, here at passiveinvesting.com, one of the first questions you have to ask yourself is, do you believe in real estate as an investment asset? Okay. If you're investing elsewhere passively, you need to ask that question. Do you believe in notes, or do you believe in whatever is an investment asset? Okay. Here, do you believe in real estate as an investment asset? I love real estate, and I'll tell you why, because I can put my money to work 5 different ways at once. I can, and especially here at passiveinvesting.com, we can create cash flow with it. I can take advantage of equity growth on it. Okay, so maybe doing some light value add to the properties, increasing income on the properties. I can actually control the value added or the equity growth on the property. I can take advantage of market appreciation. What is just naturally happening in the market? I get to take advantage of leverage to amplify my returns, and I get to take advantage of the tax benefits that are passed through to me as an investor, right? Once we understand, okay, yes, I believe in real estate as an investment asset because I want to take advantage of these five wealth generators for myself. Now we need to ask, do I want to be active or passive? Okay. Okay, if you want to be active, then passive investing may not be for you, or it may be a subsequent strategy. Okay, if you want to be passive, like if you love your job or you have a high earning job that you feel like you can hold on to for a few more years as you build your investment plan, or you just got other things going on in your life, then passive investing may be for you. For me, I know that I was working full time. I had a young child at home, and I needed not to burn that candle at both ends and 5 times in the middle. So that's why passive investing is such a draw for me. Okay, then we need to understand what you physically need from the investment. Do you need cash flow? Do you need appreciative growth? Or do you need some blend of both? For me, I always look for assets that have both of these levers in there because, it just helps risk mitigate my investment plan. Okay, if the asset can go ahead and distribute cash flow now to me, it's already profitable. Okay, it can only get, ideally more profitable. All right. Step number 2, your risk tolerance. Okay, the business plan in a passive investment is going to be one of the largest part of the risk profile. Okay. Now we have other parts of the risk profile. We have the construction. If there's any construction there, we're also going to have like the loan, but the business plan, those things are just parts of the business plan. So we're talking about everything as a whole, but it basically boils down to what's happening on the property. Is this an opportunistic deal? Okay, is this like ground up construction or a new property that's being leased up? Okay, is there a lot of opportunity here? Okay, is this more value add? Is this a property that's a little bit older that we're repositioning? Okay, maybe doing a light cosmetic rehab on it, adding additional streams of income, decreasing the expenses, but we're pulling multiple levers at once. Or is this a property that's more stabilized that just has a few low hanging fruit that if we tweak it here, there, that we'd be able to generate a larger return on? Or is this a property that's brand new, ready to go, and is just, stabilized and ready to kind of, what we call clip coupons on, and just, take advantage of the cash flow. Okay. You need to understand how the risk tolerance here aligns with your investing goals. Okay. If you need an immense amount of cash flow or a lot of cash flow, you might be looking at like a core plus or a value add. If you are needing high, high appreciative growth, you might be looking more at an opportunistic deal. Okay. But anyways, you want to make sure that how does the risk of the business plan align with your core goals? Step 3, now is the time to find an operator. Okay. And when you do that, you can do this by a simple Google search. You can, ask other operators, who there are not operators, other investors who they're working with. You can go to masterminds, meetup groups. My favorite are conferences where investors are gathering together to share their resources and share their knowledge. But find and vet the operator. Okay. And again, what we're looking for, it's like a sales funnel. Okay. We don't have to have like 100 different operators that we're looking at. We're looking to kind of interview and get our first like 5, maybe 7 operators, identified that we want to really deep dive with them and partner with them on deals. Okay. Because there's going to be enough deal flow coming from a few people to probably keep you investing for quite a while. And when you hop on the phone with them, we need to kind of suss out these questions. Do you like them? Okay. Do they seem genuine and authentic? Are they trustworthy? Okay. Are they transparent and they're honest? Well, what is their background? How many syndications have they done? How many deals have they taken full cycle? Who's on their team? And what are everybody's roles? What is their investment strategy? Remember, if you are talking to an operator who does ground up development and you want a more core or core plus asset, you're not aligned. Okay. We need to kind of move that, keep that operator's contact information for a later time. Okay. But we need to find operators that are aligned with your risk tolerance and your investment strategy. Okay. And then you want to talk to them about the major risk of their particular investment strategy. Okay. We want operators telling us what could go wrong with the investment and where and how are they mitigating risk. All right. Once we've identified our operators, we've got our goals lined out, we know what our risk tolerance is, we started talking to operators. Now we want to double check the markets they're in. Okay. I like looking for operators that are in high growth markets. I want to know the population's growing, jobs are diversified. Okay. There's not just one major employer in the town that if they laid a bunch of people off, that would, flip everything upside down. I want to know that the incomes of the area are on the rise, that crime is declining, it's a landlord-friendly state, and that the tax laws are favorable. These are just a few of the metrics that you would just want to partner with. Either operator to get information or do a quick online search, say like at niche.com, niche.com, or city-data.com to just double check all these metrics and just make sure it's a good solid area to invest in. If all these metrics check out for an area, what we're doing is we're stacking the investing cards in our favor. Okay, again, helping mitigate risk. All right, step number 5. Now it's time to vet the deal and the deal structure. And if you notice, a lot of investors that I've talked with, they actually come in the conversation at this point. They want to know about the deal. They want to know about the returns. How am I going to make money? And notice that so much of that work of figuring out who are you going to work with, what markets they're in, what's their investment strategy, what are your goals, all of that alignment actually takes part in the first 4 steps. Okay, so don't skip those. You can quite honestly like spend like a couple hours, maybe a day to figure all that out and really put yourself in a good investment position before you start looking at deals. So step number 5. This is after we found the operator, after we vetted the market. Now it's the time to start vetting the deals and the deal structure. And I would create a little checklist, an Excel spreadsheet. Okay. And, have the deal like down the column, the different deals down the column, and then the metrics along the top. That way you can quickly compare deal to deal, like the type of deal it is, the location it's in, what is the cap rate of the deal. Okay. We want to know the cap rate going in, okay, at purchase. And then what is the operator underwriting for exit? Now, guys, again, I'm keeping this very high level. Okay, we're going to dive deeper. There are videos diving deeper on each of these topics. Okay, but the cap rate, what is the entrance and what we call the reversion? Okay, or the cap rate at sale. What is the business plan? Is it core plus, value add, opportunistic? Okay, what is the capital stack like? Is there a preferred return in the capital stack? What are the splits in the capital stack? Who gets their money when? That's what we want to know. Okay. You also want to take a look at the financials of the deal, the trailing 12 financials, if there are any for the deal, and then also the projections going forward. And how do the trailing financials and the projections going forward compare? Is it realistic what the operator's putting in front of you for growth, income growth, expense growth? Expenses are going to go up. They're not going to go down more than likely. Okay. Then we also want to look at the loan structure. What kind of lending is the operator using to secure the deal, if they are? Okay, we want to make sure the lending is appropriate for the deal. And then again, we've already touched just a little bit on the returns, but is there a preferred return structure? What is the internal rate of return and the equity multiple on the deal? Okay, and we want to be able to compare these across multiple deals, but at least make sure you have a checklist of what is going to help you meet your investment criteria. Okay, once you've vetted the operator, the market, the deal, okay, and all this aligns with your goals, now it's time to place your commitment if this is the deal that you want to go into. Okay, so that means if you are actively looking for a deal, you can't delay. Okay, deals right now, go really fast. Great deals go really fast. So whenever those deal assets hit your inbox, like the investment summary in the investor webinar, you want to make sure that you're reviewing those as quickly as you possibly can. Okay, and if you decide you want to go in on the deal, yes, you're more than likely you have not seen the legal private placement memorandum or the operating agreement or anything like that for the deal. But you can go ahead and place your first firm commitment for the deal if you're ready to invest pending seeing those legal documents, okay? Because that generally will trigger you receiving the legal documents to review. Once you get the legal documents, we're going to go back through those documents to make sure that it lines up with all that data that you collected from the investment summary and the investor webinar, okay? And a couple of additional pieces. So as you can see here, the same checklist that you're gonna double check, make sure that the legal documents match what's in the investment summary, okay? But you're also gonna double check like the fee structure that the operator has, okay? Collect that, that's generally gonna be in the legal documents. And then also the legal structure. We wanna take note of that, all right? And if at any point in time you have any questions of the operator, of the market, of the deal, and of the legal structure of the investment, make sure you reach out to your operator and get those questions answered before you sign anything, and definitely before you fund your deal. All right. So once we review, sign, and fund our deal, we have essentially come to a close. We are ready to kind of sit back and relax and let the operator take over the investment and manage it on your behalf. So guys, thank you for sticking with me today and going over a high-level overview of the 7 steps that you need to undertake prior to making an investment. Check out passiveinvestingwithwhitney.com. You can get access to our deal flow there, as well as hop on a phone call with me. I look forward to talking to you very soon.